Traders, welcome to another webinar session hosted by ArgusFx. It's Wednesday today, 2 more days to go towards the end of the week. And today's topic is really interesting. It's a topic which either confuses the majority of traders or sometimes traders try to find a way out through expert advisors. Well, expert advisors or automated trading has many advantages and also some limitations. So in today's webinar, we are going to go through what is automated trading, the different automated schemes which various traders apply, and whether, and this is the big question of the day, whether automated trading can safeguard your balance. So this slide, after we will go through identifying what is automated trading and various other elements, we're going to see at the end whether automating your strategy can, let's say, provide you with the so-called holy grail, which all the traders are looking for. Let's start with our very first slide, introducing our host of this webinar and all the webinars until now, ArgusFx. As all of you know, for existing traders, ArgusFx is an STP ECN broker, which means that as a broker, it benefits from clients' trading volume, which means the more the client trades, the more the commission on the volume generated for ArgusFx, which this is very, very fair. In other words, it's a win-win situation with the trader. Some of the benefits which ArgusFx offers is protection. You all know the MT4 platform, regulation, good spreads, no charge on deposits and withdrawals, instant funding and withdrawal, support, the expertise of the company, financial updates, security of funds, and many other benefits. So the conclusion is that an STP or ECN broker is the first step to fairness, because you want to trade with a fair broker. So let's move on to the actual topics that we are going to discuss today. The very first topic is what is an automated system. The majority of you already know what is an automated system, but it's really important to emphasize it at the very beginning of this webinar. The advantages of EAs, expert advisors, the disadvantages, the types of automated schemes. So in other words, how expert advisors are used, let's say, by the majority of traders, automating your strategy. So a brief introduction or identification of the steps on how you can automate your strategy and thereafter place it on the platform. And last but not least, can expert advisors safeguard your balance? Which is the question of the day. Let's start with our very first topic. What is an automated system? It is a mechanical system where traders place their rules for their entries and their exits. And once these rules are programmed, they can automatically execute trades on your computer. Obviously, the rules for every automated system depends on each trader, how simple or complex these rules are going to be. And obviously, depending on the trader's strategy and experience. Because the strategy and the experience are two vital ingredients for creating your automated system. And in general terms, these systems are scripts, files with codes which are directly linked to the broker's platform. Therefore, we give these systems the name expert advisors. Let's go now to the advantages of expert advisors. They eliminate emotions. The majority of traders, they lose track because they cannot manage their emotions. They place a trade emotionally, or because they have assumed that that trade will make them the big money, the big funds. And they trade with emotions. As a result, if something goes wrong, they start to either place more trades or increase their volume, and the outcome is the balance going back to zero. So the emotional factor creates the so-called beginner cycle. That's why the majority of traders lose track, lose their way because of their emotions. Number two, through using expert advisors, there is discipline. The expert advisor will do what it's supposed to do. Based on the settings and on your strategy, it will execute trades, and that's it. So it will be discipline. The third advantage is consistency. No matter what, it will repeat the strategy over and over again, something which the majority of traders fail to do manually. In other words, a trader sees an A pattern for a buy order. He places a buy order. Then again, he sees the same pattern for a B order, but he places, instead of another buy order, he places a sell order. Because psychologically, mentally, and visually, it's very difficult for a human being to be able to keep, let's say, consistency on trades, consistency on the strategy. The fourth advantage of an expert advisor is speed. An expert advisor will not second guess. Based on the patterns and the settings, it will execute the order. Whereas as humans, and those traders which they are trading based on emotions, they will either enter too fast or exit too soon, and vice versa. Another big advantage of EAs is diversification. In other words, your expert advisor can trade anything, any financial instrument, other currency pairs, commodities, and so on. So it can trade at the same time, or in other words, it can identify various opportunities. The almost very strange advantage is backtesting, which in my opinion, backtesting is not advisable, even though it is considered to be an advantage. Because through backtesting, a lot of factors are not included. The real environment is not included. The actual spreads are not included. But it is a good way, let's say, to see how your EA would have performed in the past. But again, backtesting is not the way. The best way to test your strategy is on a demo account, like doing forward testing, not back testing. And the last advantage is avoid spending long hours on the computer. Because the majority of traders, when they feel that they have an amount in their trading accounts, they always like to trade. Even if there is not an opportunity, they just sit on the computer and they start trading anything and whatever they see on the chart. And also, this is something which, as humans, the majority, we cannot avoid. As long as we are in front of our computer, we want to trade. It is by nature, because we don't want to miss any opportunity. But by sitting for a long time on your PC, the only thing that you create to yourself is emotions, fear, and anxiety. You want to trade right now. So using expert advisors, we avoid spending all this time on our computer. Let's see now the cons or the disadvantages of EAs. If your internet connection is somehow low, or there is any discrepancy on your internet and it is lost, unless you have a virtual private server in place, then your script will not be working. So even if you have your EA on the chart and your internet goes off, the EA will not perform any calculations. And as a result, we have also the mechanical malfunctioning, which can be caused due to internet connectivity issues, because the EA will not be operational, or mechanical malfunctioning in the code. Another third disadvantage is that at the very beginning of the creation of your expert advisor, you have to monitor the progress of this expert advisor, to test the results, to see what is the percentage of profitability, what is the percentage of losing trades, and various parameters that will indeed let you know or tell you that your EA is working. And not only that, monitoring is needed to ensure that the code and whatever the EA is supposed to do is actually doing it. Another disadvantage, and the biggest one regarding EAs, is misleading over-optimization due to backtesting, is what we've said before. So backtesting is considered to be an advantage, but mostly is a disadvantage. Some people, they backtest their EAs, they get super results, and then when they try to place their EAs on a demo or a live environment, it's totally the opposite. Because again, backtesting does not represent the real environment. Another disadvantage is that patterns change every day. So if your expert advisor is not able to identify this change of patterns, then in the long run, it will give you only losses. So your expert advisor should be set in such a way that it will be able to identify different types of patterns. Not only one pattern for a buy and one pattern for a sell. It should be able to identify different patterns, because price and patterns change every single day. So if your EA is not flexible, at the end of the day, you will have losses in the long run, because the losses appear in the long run. In the short run, you might think that your EA is super, it's working fantastic, but never forget that in the long run are the results, not in the short run. And based on various statistics, the majority of EAs are successful the first 3 months, and then something happens. And then is the code, or is the script, or is the internet, or is the algorithm. So these EA scripts need very good monitoring, Very good creation. You don't just place an EA and that's it, and everything stops. You have to do your testing, your forward testing, to see that your EA meets various patterns, that your parameters are operational. So these are the disadvantages of EAs. Let's move on to the types of automated schemes. Through the introduction of the internet, of the brokers, the advanced technology, there are different types of automated schemes. So when we say automated scheme, we don't just mean an expert advisor that will trade for a trader, but we mean also other types of schemes. The most common automated scheme, when it comes to trade for a trader, we have the scalping EA. This scalping EA is based on volatility and momentum. And as you all know, scalping is trying to identify fast entries and fast exits in the market. Another type of EA is of what I call it the reversal EA, trying to find major support and resistance levels, and when the trend is about to change either to the other direction or it will continue moving to the exact same direction. But mostly reversal EAs aim to identify the most difficult part, which humans are not fast enough to see: trend reversals. In other words, when the trend is about to change to the opposite direction. Then we have the arbitrage EA. And this is an EA which actually does not trade. All the decision making of this EA is to take advantage of time inefficiencies between instruments or brokers. In other words, the arbitrage EA tries to identify when two pairs will move to the other direction. So let's say we have the euro dollar and the euro yen. There are points which these two pairs, they either move at the same direction, or there are times which one pair moves upwards and the other pair moves downwards, or the other way around. So an arbitrage EA tries to find these inefficiencies in price and time and places two trades the exact same time. Regarding arbitrage, we're going to have another webinar specifically for this type of automated scheme, so you can get a greater familiarity about this scheme. The fourth type of automated schemes is mirror trading. We have the followers, we have the manager account in simple terms, and the manager actually trades, places trades, and the followers, they follow this manager's account trades. So this is mirror trading. Instead of you trading by yourself, you follow the trades of the main trader, let's say, of the main manager account. So we have another name for this mirror trading, also called social or managed accounts trading. And last, the last type of automated scheme is Forex signals. So there are traders, organizations, institutions, which they create automated systems and they offer signals when opportunities arise. So the trader sees these signals and takes the decision whether to trade that signal or not. So these are the 5 most common types of automated schemes. Let's move on now on how you can automate your strategy in simple terms before we move on to the last slide and the most important one. So if somebody wants to automate a strategy, first of all, what you need is to find a programmer. One of the most known websites is the mql5.com, where you can spot different programmers. You can provide to the programmer of your choice the settings and the parameters of your strategy. And together with the programmer, you develop your expert advisor. And the programmer is by your side in case something goes wrong or there is an error in the code of the script. Thereafter, once you have, let's say, developed your software, your automated strategy, you place the file on the MT4 platform. And thereafter, you drag and drop this file on the chart, on the instrument of your choice and the time frame of your choice. And the software script is ready for use. The EA will be functional and operational when you will be able to see on the right-hand side of the chart a smiley face. This smiley face indicates that the expert advisor is working. A big advice is do not place your automated strategy directly on a live account. Test it first for a period of 6 months on a demo account. In the meantime, if you would like to trade on a live account, but manually. Once you have tested your strategy, you can then deposit and trade on a live account. But it is really important to test your strategy first before you do anything else, because you don't want to see your account vanishing because you haven't tested your EA and because you haven't done the necessary homework. And now we will move to the main slide of today's webinar. Can EAs safeguard your balance? In other words, is your deposit, your capital, safe by placing an EA on the charts? Well, we have two major parameters to consider. The first one, which is the most logical and obvious, an EA can safeguard your balance if it is used the right way, which the right way always depends on you, depends on your settings and the criteria which you place on your expert advisor. Because an expert advisor, it's a mirror of your psychology. You don't just create an expert advisor for the sake of doing so. You create an expert advisor that will reflect your strategy based on your criteria, your psychology, your discipline, and all the factors which are obstacles to your trading activity. Therefore, the A is the script that will eliminate all your negative aspects such as emotions, fear, anxiety, not being disciplined, and all these parameters will be placed on the script together with the strategy, with your settings and criteria. And another extremely important factor is never forget that patterns change every second. And it's what we said before. Do not create an expert advisor that will read only 2 patterns, because at some point in time, these patterns will vanish, will not exist anymore, because other patterns will come to replace these patterns. So your EA should be adjustable in such a way that, first of all, it will safeguard your balance. You will not lose your money. Second of all, it will be able to manage losses the right way. Because even if automated, the priority for every trader should be how to manage losses and not how to manage gains. So if your expert advisor is such that will help you at first to minimize losses, then gains will come. On the table below, you can see 4 types of EAs. Previously, we have seen what EAs the majority of people use. In this last slide, we are seeing at 4 types of EAs, which they have their own tactic and methodology. First of all, we have the arbitrage, which this arbitrage EA takes advantage of time and price inefficiencies, placing 2 trades. It's like hedging, but it's not hedging. You take advantage of time inefficiencies by placing 2 trades, a buy and a sell, and as soon as the total amount of pips is profitable, the EA executes the trades and gets out. So in other words, arbitrage is having 2 trades, a buy and a sell, and once the sum is a positive number of pips, the EA exits the orders. The second one is scalping. To be able to apply scalping the right way, your EA should be based on price action and advanced risk management. Because there is no other way to do a scalping EA based on indicators. Because indicators, they are based on historical patterns. Therefore, if you are willing or thinking to do a scalping EA, take advantage of price action, which means candlestick patterns, and advanced risk management, such as your stop loss, your take profit, trailing stop distance, which means that in case your order is a positive one with profits, and the more positive it goes to your favor, the EA converts the stop loss instead of a losing trade into a profitable trade and runs behind the price. For those that did not understand, I can explain at the end. Then we have hedging. And hedging in this case, hedging EAs is managing losing trades. So having an EA that as soon as your trade is wrong, it will automatically execute another order in an attempt to minimize the existing losing order and somehow create a balance between your losing order and the new order which is placed on the platform. And finally, using an EA that will not trade on your behalf, but to automate your indicators. And automating an indicator, not the indicators underneath the chart, but indicators on the chart, on the graph. So in this case, and in this way, you see the indicators which are automated, and they give you an automated indication, and you trade manually. For those that they have seen last Friday's webinar, you have seen a strategy with indicators which they change according to the price movements. This is also another form of automation. It doesn't mean that an EA should do everything by itself. An EA can also be used in a way that will give you different types of signals through different time intervals, and the decision will be solely up to you. So to summarize this very important slide is that an expert advisor should be used appropriately. And always remember that before creating an expert advisor, you should know that patterns change every single time. And the 4 types of EAs which you can use as a basis to your strategy. So you can create a strategy that could also be arbitrage, could also be scalping, could also be hedging, and you could also have some automated indicators which can also help you to trade manually when you feel like doing so. So we came to an end of this webinar session. I hope that it was a session which helped you to identify what are expert advisors and their importance when used the right way. There are also traders which they do not use software scripts which are installed on the MT4 platform. They use external software scripts, external trading softwares, which once they get a signal, let's say, they come to the MT4 platform and they execute the trade. I hope that it was a webinar to your interest. If you are planning to create an expert advisor, do not hesitate to contact us for any support or any ideas that you may have. Do we have any questions at this moment? Or everything is clear? Okay, we have one question here. The platform comes with 2 EAs. Are they any good? The most advisable thing is to create your own EAs. Those EAs are just samples for the trader to see how an EA works on the MT4 platform. But it is not advisable to use these EAs which are already shown on the platform unless your broker has a custom-made expert advisor, which that is a different story. But it's not advisable to use the existing EAs which are by default shown on the platform. Any good suggestions? Any EAs that work? Basically, I'm a fan of manual trading, and as you have seen last Friday, I'm using a manual trading strategy, or as we have seen in the last slide, automated indicators. I'm more of a fan of automated indicators. But nobody says that an EA cannot work. There are also extremely good EAs, but they need a lot of testing, a lot of optimization. But there are people, I believe, that indeed they have really good EAs with really good results. Well, the EAs are not expensive. If you, let's say, decide to create ones using mql5.com. And we can also guide you on this, how to log in to mql5.com, how to, let's say, identify the programmer of your choice. But it's not that expensive because this type of software scripts, they are like files, drag and drop files on the platform. So it can vary from $30 to $100, depending on your strategy, on the complexity of the expert advisor. Any other questions? Everything was clear, or something that did I answer? All right. The site, yes, sure. I'll go back. Give me a second. I'll go back. to find this is the site. mql5.com is the easiest way and to create a software script to test on the MT4 platform. All right. Thank you for participating in today's webinar session. We'll see you all on Friday with a webinar called, let's see, Introduction to the COG channel tool. Some of you have already seen this tool on last Friday's webinar. Some of you will see for the first time on Friday. Thank you very much for your participation. Have a nice evening. See you all on Friday.